Dear students, I welcome you all to the second video lecture of our MBA program. So, in your first semester, you have Accounting and Finance for Manager as a course, and its course code is MBA 101. And in this course, you have the first unit, Introduction to Financial Accounting. Yesterday, we had uh, learned about the introduction to accounting, meaning and evolution of accounting. Today we'll be seeing about the importance of accounting. So as you all know, accounting plays a major role in success of any business because without accounting, businesses cannot sustain actually. What it does, the accounting, it ensures systematic recording of financial transactions. It records income and expenses. It records assets and liabilities. It makes tax assessment easy. It helps shareholders, management, and stakeholders. It acts as a basis for estimation and projection of financial budget. So basically, see, accounting plays a major role in success of any business because accounting, without accounting, we would not be able to judge whether your business is into profit or whether it is into loss. So it ensures the systematic recording of financial transaction, that it is or whenever a financial transaction occurs, the systematic recording can be done through the accounting process. It records the incomes and expenses. So whatever income is generated from your business and whatever expenses your business incurs are recorded in the accounting part. So also it records the assets and liabilities. So what are the assets and liabilities? The assets are the, say for example, the plant and machinery, the land owned by the business, uh, the cash in hand, cash at bank, etc., etc. And when it comes to the liability part, the liabilities are the borrowed money from friends and family, borrowed money from banks as a loan, okay, borrowed and bought some raw materials on credit. So these are your liabilities. It makes tax assessment easy. Every business has to pay some sort of tax to the government, okay. So when you maintain the accounts well, there is a provision made for redemption of taxes, okay. So for example, we can say if you purchase a machinery and it has a depreciation value, so that depreciation value will be acted as a redemption in your taxes. There are a number of other things also that we will see in the later part in detail. It helps shareholders, management, and stakeholders. What does it do? So it reveals whether your business is into profit or it is into loss. So likewise, shareholders, management, and stakeholders can act upon. See, for example, if I want to purchase shares of some company, I would see whether the company is making profit year on year basis, quarterly basis, half yearly basis, annual basis. Okay, if it is progressively making profit, I would be interested to invest in that company, right, as a shareholder. If it is making losses, eventually I would not be investing into that particular firm or that business. And why it is important for say management per se? Because management has to make decisions, right? Management has to decide whether the company has to, like say, change the strategy of manufacturing, change the strategy of sales. Likewise, there are a number of decisions which has to be taken by the management, and these will be depend upon the accounting figures, okay. And the stakeholders at large, stakeholders part will be seeing in the next slide, okay. And it acts as a basis for estimation and projection of financial budget. So what is financial budget is to make provision, right? Say for example, if I'm into a business of making a pen. So in pen, what are the things required? We require manpower, we require electricity, we require plant and machinery, we require raw materials, uh, and other sort of things. Like these are the company overheads. We have two different overheads over there: company overheads and factory overheads and office overheads. So in office also we require staff, like we require the accounting personnel, we require the manager, we require stationery and whatnot, right? So likewise, we need to make provisions for, if I wish to say in a particular financial year I wish to produce 10,000 pens, I need to make a rough provision of budget, right? So say for example I would incur say 1 lakh rupees. Likewise I have to make a provision of 1 lakh rupees. So because 1 lakh rupees has to be incurred on the manufacturing of say 10,000 pens, whatever we have, like given as an example. So likewise, so accounting part helps you in estimating the financial budget, estimating and projection of the financial budgets. So this all was the part of the importance of the accounting. Next we'll move on to the users of financial statement. So what are these financial statements? There are a number of financial statements, like for example balance sheet, profit and loss account, cash flow account, income statement, and etc etc, profit and loss account, trading account, etc. Okay. So who are the users of these financial statements? First of all, the owners and the shareholders. Owners are those persons who directly own the company. They have the major stake, major shares of any company, and they are called as the owners. Apart from owners, these are called as the shareholders as well, because there is a shareholding pattern. This again you will be learning this in detail in the uh, other part of the curriculum of the MBA program, right? So depending upon the number of shares I hold in a company, I become a shareholder. Say if I have already given an example of this thing. Say for example, if I hold 10% of shares of a X company, then I'll be a 10% owner of that company, right? Right. Hence, fourth it is like given in the slash. Okay. Next, the user of the financial statements are the management oblique board of directors. So apart from owners and shareholders, we have another team named as management board of directors, because the owners don't run the organization, the firm. The management, the board of directors actually run the firm. There is a possibility the owner can be a part of the board of directors or the management, but then the management team, in management we have different managers, like say chief executive officer, chief operating officer, managing director, general manager, HR manager, finance manager, marketing manager, and so on and so forth. And we have a team of board of directors. So this board of directors will have the authority to decide, make decisions about the company. Okay. And we have next user of the financial statements are the lenders. Lenders are those persons who lend money to the businesses. Okay. To run any business we need funds, we need money, and if we don't fulfill the need of the money from our sources, we need to borrow it from the lenders, right? Again there are suppliers and creditors. So who are the suppliers? Suppliers are the raw material providing people. Okay. To run any business we require raw material, as well as we require other such a number of things, like say for example if I run a business of pulp making, I would require the fruits as a raw material as well. As well as I will require say some there is some infrastructural requirement of the company, we need to build a road, so I would require the services of the construction company as well, right? So likewise the suppliers are the persons who provide services or to provide the raw material to the company. So these are again called as creditors, because many a times what happens is we purchase the raw material or we avail the services on credit. credit is to avail the service or purchase the raw material at this point, say on 9th of October 2023, and I would be paying for the service or the raw material purchase at the later period, say after 2 months or 3 months. There is a standard time actually, within 90 days we have to pay to the creditors. The next part are the customers. So these are again very important aspect of the company to the business, because if we don't have customers, there is uh, no point to run the business, right? Without customers we cannot sustain. So again, customers will see your financial statements and find whether your business is running into profits or not. Why they are interested in your financial statements? Because even if you are running into profits, that shows that you are providing them a quality service of quality products, right? Again, the next part are the employees. So employees, definitely employees will be benefited if the organization is in profit, or else they would not, because if any business, if it is earning profits, it will pay to its employees fair and handsome salary, right? Fair salary. Otherwise, if a company is into losses, might be it won't be able to pay the salaries of the employees in time or sufficient salary or likewise, right? Next are the government and regulatory agencies. Even government is interested in your financial statements, because see, government will however require taxes, right, from the businesses. If the businesses are into profit, government will be getting more taxes, benefited by the taxes, and the obviously the regulatory authorities as well, such as like SEBI and all those things. So moving forward, there are some types of accounts. There are three types of accounts: financial accounting, management accounting, and cost accounting. So what is this financial accounting actually? It deals with recording and preparation of statements revealing the income and financial position of the business on the basis of the events which have happened in a particular period. So we have a financial year actually, okay, starting from 1st of April and ending on the 31st of March. So this is called as the financial year. So the major purpose of the financial accounting is to report the position of the entity based on the reporting date. The reporting date will be the 31st of March of the year. Okay. Uh, the reporting is done through various financial statements. Some of them are like balance sheet, okay, income statement, and so on and so forth. Okay. So what these financial statements present? They present the information on revenues, profits, cash flow, assets, liabilities, and so on and so forth. So though this information is very important, it is not adequate to aid the management in planning, controlling, organizing efficiently, conducting the course of businesses. See, management is all about planning, controlling, organizing, and monitoring. Okay, these are the basic things of the management which you will be learning in the other course. Okay, the next part is the management accounting. So what management accounting does, it deals with the processing of data gathered in a financial accounting and cost accounting together for managerial decision making. Say we have different managerial positions in a firm. We have just discussed about like HR manager, finance manager, marketing manager. If I say HR manager wish to make a decision of employee hiring, or to terminate the employees, to lesser the employees from a firm. So how these decisions are made? Say if a business is running into profit, and if it is like what you say, making profits, the HR managerial can make a decision on hiring more employees so that the market demand can be fulfilled. if it is not running into profit, there might be the employee cutting. Okay, the number of employees might be, like what you say, terminated from the firm, from the business. So this was just an example. Likewise, the other departments also make decisions. Like there are production management, other managements too, right? Next, coming to the cost accounting. So what cost accounting does is, the cost accounting records, analyzes and estimates the cost. This is again a important type of accounting. Okay, we have discussed in the previous video as well, and as well in this video also. To manufacture any sort of product, we need to incur some cost, right? And why this cost accounting is important? Whether to know what cost I am incurring on production of a particular service or a product, right? So depending on the accounting of cost accounting, we can reduce the cost, right? We can reduce the cost of say raw material, or we can reduce the cost of the manpower, we can reduce the cost of the machinery. Likewise, we can reduce the cost of a product or a service, right? So the with this, I guess it would be lengthy if I would continue with the other part of the syllabus. Okay, so I'll end here. Okay, thank you. We'll just stop the video, and again we'll meet in the next video. So best of luck with your studies. Thank you.